Today is Friday, May 10th, 2024. I was away with loved ones this week, so I didn't get as much as I wanted to done, but I do think we made good progress, which I'll share in a bit. But just as an update, I started backtesting the original strategy that I shared with everyone and quickly saw that there was a low number of setups. I found that a lot of the times price did not come to the zones that I marked. I think it was like April 15th and I only saw like 2 or 3 setups. And as a day trader, that's probably not good. Personally, since I want to be a day trader, I am looking for a strategy that has more setups than that. So I quickly realized that I had to refine this strategy further to make it work for me. And another thing I realized, I was following Lewis Kelly's strategy, but he trades the London session and I want to trade the New York session. And so I have heard that different sessions could have different strategies, like some strategies work better than others depending on the time that you're trading. So keeping that in mind, I started looking into New York trading strategies specifically, which is when I stumbled across this video. And in this video, he uses the session highs and lows as an indicator as to where price could potentially move. And he's not the first trader I've seen that incorporates the session highs and lows in their trading strategy in some way. And so I figured, why not do the same? And so I spent this week looking at historical data for Eurodollar and pound dollar and refined the strategy with the session highs and lows that way. And I'll go into that in a bit, like the data points and how I went about that. But I also, with that, updated the trading plan. So the original strategy and trading plan I shared has been updated and refined just based on what I was seeing during my backtesting and the historical data. I can get into everything now. I had to go run and get a jacket because I'm freezing. But anyway, before we get into how I refined this strategy and the back testing, I did want to share the updated trading plan just so we're all on the same page. And so I highlighted the major changes in orange. So besides the overall strategy being changed, I did change the risk to reward, percentage of risk, and the trading time. Starting from the top, the original risk to reward was a 1 to 3. I lowered it to a 1 to 2.5. And I did this for a couple of reasons. So the higher the risk to reward, the lower your win rate is. So for example, if we have a strategy that has a risk to reward of 1 to 2 versus another strategy that has a risk to reward of 1 to 5, the 1 to 5 risk to reward strategy will have a lower win rate than the previous strategy, but it will make more money versus the 1 to 2 will win more. It'll have a higher win rate, but you won't make as much as that 1 to 5 risk to reward strategy. And so really it comes down to what kind of trader are you? Can you lose a lot in a row and still be psychologically sane and okay and let it not affect your trading? Or do you need to win more often but not make as much? So it's pretty much trading preference, honestly. Can you lose a bunch of trades in a row but maximize your profits without it affecting your psychology? Like, do you prefer that kind of trading strategy? Or do you prefer a trading strategy that wins more, but you just don't make as much as the 1 to 5 risk to reward strategy? You can still profit, but it won't be as much profits as the other strategy. And so me personally, because I was emotional in the past, I think it's just better for me to start with a lower risk to reward ratio. Because honestly, I don't know if I could stay sane if I lose 5 to 7 trades in a row. So we're going to lower that to a 1 to 2.5. Maybe 1 to 3 was a little ambitious. But yeah, that's the risk to reward for this trading plan. In terms of the risk, it was originally 1%. I did raise it to 2% of the trading account just because I did lower that risk to reward ratio. In terms of the trading schedule, I originally said that I would trade during the London-New York overlap from 8 a.m. to 12 p.m. Eastern Standard Time. I actually extended this by 1 hour. So my new trading window is going to be 7 a.m. to 12 p.m. Eastern Standard Time. So in this time frame is when I'll be looking for setups. I chose this because according to Mac in his video, he did say that he was seeing setups at 7 a.m. And so I figured, might as well try it. One thing I didn't add here is if an order gets placed before 12 p.m. Eastern Standard Time, I will stay and manage that trade. And so let's say I place a limit order at 11:45 and it gets filled. I will stay and manage a trade even if it's past 12 p.m. Eastern. And that's because I did see winning trades that did get filled towards the end of the trading window, but still won. So those are pretty much the major updates to the trading plan. Now I can get into how I refined the strategy. The major change I added to the strategy so far as I'm trying to refine it is incorporating the session highs and lows. So the indicator that I used to helped me with this is called the ICT Kill Zones and Pivots indicator. This is the one that Lewis Kelly uses to mark out the session highs and lows, but I did change the settings to match Max just because he's trading the New York session and that's the session that I want to trade. And so scrolling down, these are the settings that I have for the indicator. So I did make the boxes more transparent so I could see the chart better. And then I changed the sessions and updated the times based on Max indicator, like I said. So feel free to take a screenshot here. Once you put the indicator on the chart, this is how it'll look like. So we can see here we have our Asia session, our London session, then our New York morning session. And then the highs and lows are labeled. So you can see here, this is the Asia low, Asia high, London low, London high, and etc. Because I knew that a lot of traders incorporate session highs and lows into their strategy, I figured that there must be something that they're seeing over and over again to be able to do this. And so I decided to look at the data myself. And so I went through the last 3 months for euro dollar and pound dollar, so February, March, and April, and wanted to see if I could find data or pattern or something. I started by counting how many times the London low was swept during our trading window versus how many times the London high was swept during our trading window for both pairs. And just as an example, the way I did this, so my trading session is from 7 to 12. So I'll mark it here so it's a little easier to see. So I went and counted how many times the London low was taken during this trading window versus how many times the high. So in this example, we could see that the London low was swept during my trading window, as marked by this candle here and line. And then the London high was swept during this trading window as well. And so I would mark that as a low being swept and then a high being swept. And I did this, like I mentioned, for the past 3 months. And what I found was this. Over the last 3 months, for euro dollar, the London low was swept about 58% of the time, and the London high was swept about 63% of the time during our trading window. And then for pound dollar, the London low was swept about 59% of the time, and then the London high was swept about 66% of the time during our trading window. And so, as a takeaway, the London high was swept more times than the London low during our trading window over the last 3 months. I did put a note here that it's not by like a crazy amount, not by like 20-30% more, but it's still interesting to note. This is what I really felt better about. So over 50% of the time, closer to 60% actually, euro dollar and pound dollar will take either the London high or low during our trading window. And so knowing that 60% of the time, either the London high or London low will be taken gives me more confidence, and I feel like helps me to have a better directional bias, because now I know that 60% of the time the London high or London low will be swept. And now I just need to incorporate that with market structure to see which scenario is more likely. So that's going to be my directional edge. So that is the major change that I made to the strategy here, is incorporating the session highs and lows of London. So with that, I also wanted to refine the entry criteria, and that is still something I'm working on. But to start, continuing to look at the charts, I went back and tried to see if there were any patterns, or if there were any entry patterns that were happening over and over again, or at least it looked like it was happening over and over again, and two stuck out to me, which were 3-minute flip zones and the liquidity sweep plus 1 minute change of character. And I'll get into what a flip zone is in a bit, but this is what I have done so far to refine the strategy, and I want to continue refining it into next week. For those who are unfamiliar with what backtesting is, it's pretty much a way to evaluate whether a trading strategy performed well or not based on past data. And essentially what it means is you have your strategy, so now you want to go back, look at historical chart data, and see how many times your strategy wins or loses. And so you would calculate the win rate and just see how effective the strategy is. When I was backtesting, I was pretty much backtesting my strategy. So looking at the 4-hour trend, marking out those 4-hour zones, looking at the 15-minute trend, looking at the London session highs and lows, and then looking for the 3-minute flip entry. I am currently using TradingView to chart and backtest. I am on a paid plan, which is this one, because it gives me access to the bar replay tool. What the bar replay tool does is, let's say we want to go back in time to, let's say, May 7th. So we would click replay up here, and we would select how far back we would want to go on May 7th. So let's say May 7th at 3:30. You click that, and so now what it will do is erase all the candles before the date you selected. And so here we can see that the last candle we see here is for May 7th, 2024 at 3:15 p.m. So what it does is allow you to kind of simulate live trading. It's not perfect, but I would say that it's pretty helpful. And you can also control the speed. So you can make it faster or slower based on your preference. And so let's say I pick 3 and I press play. And now we'll see that the next candles are starting to form. And so yeah, that's pretty much the tool that I use to backtest. As a recap, the strategy is first to use a 4-hour chart to determine the overall directional bias in the market and to identify key 4-hour zones where price can react. Then we want to use the London session highs and lows in combination with the current trend and market structure of the 15-minute chart to determine our directional bias. So where do we think price is going to go? And we also want to mark out the 15-minute zones where price may react. And then lastly, we want to wait for confirmation. And like I mentioned, I do want to refine the entry. And so 2 entries that I saw a lot, or at least it felt like they were recurring, were the 3-minute flip zone and the liquidity sweep plus 1-minute change of character. And just to make sure we're on the same page, when I say flip zone, what I mean by that is this. So a flip zone is pretty much a supply turned demand or a demand turned supply zone. And I call it flip zone because someone else called it flip zone, but I don't even know if that's the right term for real. It's very similar to a support turned resistance and a resistance turned support level. So we see here on the left example that price is bullish with higher highs and higher lows, and these are the demand zones that we marked out. But then price comes, has some kind of reaction to this demand zone and breaks past it. Because it broke past the demand zone, this is an indication that price may go the other way. And so now, because price broke past the demand zone, we want to find what's the move that caused this break in the demand zone. And in this case, it'd be this. So this move caused the break in the demand zone. And so this is where we would want to sell from. This is our flip zone. And then we see in the bearish to bullish example, something similar. Price is originally bearish with lower highs and lower lows. We come up to this supply zone. We have some kind of reaction. And then we break past the supply zone. And so once it breaks past the supply zone, we want to look for the move that caused that break of the supply zone, which is this one. And so this will be our flip zone where we would be looking to enter a trade. So now that we went over that, I know that I said I would backtest 100 trades, but something interesting happened. I started getting a lot of people telling me that they don't even backtest their strategies and that backtesting for them personally was a waste of time. And so I got curious and I asked on Instagram how many people backtest their strategy versus forward testing and refining it. And 40% of people said that they don't backtest, they just forward test and refine the strategy. And I thought that was really interesting because from my experience, I backtested a lot before and I was still unprofitable. For me, in my situation, it was just always different in the live markets. Like, it always looks good on paper when you're backtesting, but when it comes time to execute, it's just a totally different thing. So keeping that in mind, I thought that the best approach for me was to do both. And so I know I said originally that I would backtest 100 trades. I definitely dragged it. I did not backtest 100 trades. Honestly, I didn't backtest as much as I wanted to, and I am going to continue backtesting next week because, like I said, I was away. But I did do some backtesting. I backtested the 3-minute flip zone entry on the euro dollar for the month of April. And so that came out to about like 26, 27 trades. And I plan on forward testing this entry next week with paper trades. I think for me personally, a combination of backtesting and forward testing will work best. Just because, like I said, I backtested in the past. It did not mean profitability for me. So I definitely think I need to refine it. And also, I want to use forward testing to kind of get into the rhythm of being a day trader, right? Like, I want to get up in the morning and follow my trading plan and also get used to losing quickly because with trading, you have to be a good loser. Like, you have to be able to lose and not get hurt by it and be able to come back better. So I kind of just want to get myself into that early. Like, I want to improve my psychology quickly because I know that could be a weak area for me. And so I definitely think we're testing and refining this strategy with this 3-minute flip zone entry would be beneficial. So yeah, I pretty much backtested this, like I said, the strategy with this entry criteria, the 3-minute flip zone. So I went back to April 1st and used the bar replay tool. And for every win and loss, I marked with either red or green. So if I lost, I would put a red here, like a red line. Then if I won, I would put a green line. After going back to April 1st, using the bar replay tool and then marking out my wins and losses, I went online to find a backtesting spreadsheet. And so the one I use is this one. And I will leave the link in the description. It's by Trading Heroes, and it was a very simple backtesting spreadsheet, but I pretty much just used it to calculate the win rate of the strategy. And so what this looked like was this. And so pretty much for every win you got, you would put 1, and every loss you get, you would put -1. And so it would count the wins, the losses, and then the win rate. And so just based on how I backtested it, it came out to about a 50% win rate. And just one thing to note with this spreadsheet, I actually came in and edited these columns. I did change the formula up a bit. I did extend this and made this 200, and I did that for here, 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 and here. And I really did that because the original formula only went up to row like 23, and I wanted more rows than that. Also, this instruction link is broken. It doesn't really work, but instructions are going to be in the link that I provide in the description. With all that, I see a 50% win rate with the 3-minute flip zone entry for the month of April. And yeah, like I said, that was about like 26, 27 trades, so definitely not 100. But I just think I personally will find more value backtesting, but really like trying to forward test this strategy. Here's an example of a trade I backtested. So I'm just going to use the bar replay tool to move price back a bit. So the last candle we see here is for 6:57 a.m. on April 30th. And because my trading window starts at 7, I'm just going to press play for the 7 o'clock candle. So if I were trading this day, when I enter the market, this is what I'm going to see at 7. So after I determined the overall trend on the 4-hour, looked at the trend on the 15-minute, marked out my zones and have my direction, now I'm just waiting for a 3-minute flip. And so if we continue to a price, we see here on the 3-minute that this here is a demand zone that caused a reaction. So price broke structure, tapped into this zone here, and then failed to create a higher high. And because this zone gave a reaction, I'm considering it valid for a flip because I only look at zones on the 3-minute that showed some kind of reaction. So for me, flip zones are only valid if they have some kind of reaction. Now I'm waiting to see if price breaks past this demand zone. And so if we play price forward, so we can see here that this candle here closed below the demand zone. So it broke past it. And keeping that in mind, as well as price failing to create a higher high and reacting at a 15-minute supply zone, it gives me more confidence to go bearish because it was a flip. So price broke past this demand zone. We want to find what was the zone that caused this break of the demand zone. And for me, I identified it as this one. So this was the buy to sell move that caused the break of the zone. And so I placed an entry here. And if we see, price taps into it and then hits the take profit. And so this would be considered a win. So I would put a green line here. But if this trade lost, I would put a red line. And so that's pretty much how I backtested the strategy using the bar replay tool. So that's pretty much what I've been up to this past week. In terms of next steps, like I mentioned, I do want to forward test and refine the strategy that I backtested. So that's the 3-minute flip zone on the euro dollar. Then I want to continue backtesting. So for pound dollar, I want to backtest 2 entry criteria. One is the liquidity sweep and the 1-minute change of character. And then the second one is the 3-minute flip zones. Then I want to backtest the liquidity sweep plus 1-minute change of character on the euro dollar as well. Then I want to continue looking at charts and more patterns and trends, seeing if I could find any more data points. Lastly, I do want to refine the entry criteria further by paper trading and seeing which one works best. So is it going to be the 3-minute flip zone? Or is it going to be the 1-minute change of character? Is it going to be a combination of both? Or is it going to be a combination of one with a 15-minute zone? So it's really just seeing what entry criteria has a better win rate for me based on how I'm going to execute it and my trading window and plan. So that's pretty much next steps for me. And honestly, I do think this week definitely taught me the reality of trading. And I was hearing it a lot that Trading is constant refinement and improvement, and I feel like this week really showed that, because the original trading plan I showed definitely had to be improved and refined. Yeah, so that's what I'm going to be working on this coming week. So yeah, in the next video, I'm going to be going over the paper trades I take, my analysis on those trades, backtesting results, and anything else that I find interesting. If you enjoyed the video, please like, comment, and subscribe, and I'll see you guys in the next one.